All right, welcome to the Daily Market Recap for Wednesday, October 22nd. In today's video, we'll be taking a look at the action of the indexes, the liquid leaders, industry ETFs, then end the video with long and short setups like I do with every daily recap. So if you guys enjoyed the video, please leave a like and subscribe to the channel. And if you want my market takes throughout the trading day, along with the live stream at the open and any trades that I personally take, you can sign up for the Market Pulse Discord using the link in the comment section. Starting things off with the NASDAQ, this doesn't really show how wild the action today was. NASDAQ finished down 1%, losing the 5-day moving average on a closing basis. At one point, this was down about like 1.7%. We undercut the 10-day, the support gap, and the 20-day moving average, but had a nice end of day rally to recapture at least the 20 and the 10 and part of the support gap. But again, until we break and close either above or below the range from that Friday distribution bar on October 10th, you should expect a lot of chop. And in a choppy market, when you feel very bearish, you should try to find a way to get long. And when you feel very bullish, you should try to find a way to get short. Until we close either above this range or below the range, that is the definition of a choppy market. S&P 500 also still within October 10th's range. Undercut the 5, the 10, the 20-day moving average, closed above all of them except for the 5-day. So we'll see if that's a high or low overall. IWO, this more so reflects the damage in the growth stocks in the market. We already had some churning at highs, put in a lower high on, what would that be, on Monday. Gap down today, close under the 5, the 10, the 20-day moving average on a big pickup in volume. We did close kind of middle part of the range, so that's one bonus. And overall, as long as we don't close below today's low, I think the uptrend can stay. I guess still in an uptrend. Above the 50-day moving average is usually a good sign. But for intermediate term trading, we're below the 20-day EMA. That's usually my risk on or risk off line in the sand, and we are below that. Same thinking with ARKK. We've started to see some distribution here. 3 unfilled gaps to the downside. This last one today was the largest. The other two are just kind of slivers. Close under the 5, the 10, the 20-day moving average on a big pickup in volume. We did bounce at the support gap. So anyone who's like really late to the game shorting some of the extended names probably got blown out towards the end of the day. That's what we need to see in the market. After you see an extension down into a support gap, you should not be starting your short positions at that point. You should be starting them much higher. So see how we chop the rest of this week and into next week. Let's take a look at Bitcoin. Yesterday, we got basically to the 50-day moving average and failed there, closing right on the 200-day. Today, slight chop lower. As I'm filming this, we're under the 200-day moving average, right around 107.4K. And this looks like a lower high. Now, do we actually get a lower low and take out the kind of panic bar low from Friday, October 17th? We'll see. But for now, this is just not a easy dollar environment. Getting into the leaders. Oh, I added a couple here. Let's just go over the ones that we've had from before. AMD to the downside, down 3.3%. Semiconductors actually held up pretty well today overall. Bounced to the 10-day moving average, closed in between those two. Not too much damage there. BE, I might be replacing after today. We've now had 3 unfilled gaps to the downside, close under the 20-day EMA. We did get a nice wick towards the end of the day, but after a move from 15, or actually 9, back in October, so for this year, a move from 9 to $130, probably time for a full base. And stocks that are starting their base, I don't really want to keep on the leaders list, so probably going to be nixing that at the end of the day. Tesla down about 1%, bounced to the 20-day EMA. After hours, they reported earnings today and have been just kind of chopping lower a little bit, trading at 423 right now as I'm filming. So 423 would put us below the 20-day EMA, below the low of today, and somewhere near the support gap. So we'll see how if buyers step in there or if that's a gap down, kind of the secondary gap down from the highs, and then we accelerate lower. LEU, I will be replacing this today. Third unfilled gap down, lost the 20-day moving average on a big pickup in volume. Other names within that theme, OKLO, this was down, no, not OKLL. OKLO was down another 14%, also losing the 20-day EMA. SMR within that same group made new highs on October 15th and then just immediately failed, losing that entire move. So that nuclear and uranium names starting to show some weakness. Rocket Lab closed under the 20-day EMA, our first unfilled gap to the downside since the new highs. Not ideal action there. MU still showing some good strength, bounced at the support gap, closed over the 10-day EMA. We do have this resistance gap that we uppercut and failed at, so still sellers present in that area. The sooner that we can get through that resistance gap, the better. VRT, this sold off on earnings. They reported pre-market, made new all-time highs, and then just immediately got sold off. Bounced to the 20-day EMA, so now let's see how volatility can contract there. Palantir, another big kind of distribution, flush lower, kind of the third in this handle. Really kind of an awkward handle here. Starting to feel like a very late stage base. And if we close below the 50-day moving average, I wouldn't be surprised if this like rolls down back to towards the 200-day and actually rebases and kind of starts a little downtrend here. It's had an awesome run from $6 up to $180 without much of a true, like it's had bases, but without much of a real decline. Things are getting choppy here. If the market doesn't like put in a stop on these sell bars, I think we're in for some big moves lower. Google, good strength, but still uppercut and failed the resistance gap, closed up a 0.5% today, bounced at the 10-day moving average. And then two names I'll probably be replacing BE and where is it? LEU with CLS. Made new highs recently, pulling into the 10-day moving average. And then UUUU. Someone knows something today because we gapped down, opened on the low, closed near the high when the indexes and the rest of the market got whomped. So definitely want to keep this on our radar as well. Getting into the industry ETFs, we'll just sort this by price percent change, go through a couple of them. XLE, the energy ETF, this might be an emerging theme. Still starting to put in some higher lows overall. Disappointing action the last like 2 weeks as we've gapped down after like a test of the resistance gap here, put in another resistance gap, lost the 200-day moving average, but one of the only themes that really hasn't moved in the past like 3 years. So if that does get going, it's got a massive base to do so. So we'll keep an eye on that. XLV, this is another theme that I'm even more focused on is just healthcare and healthcare related names. Huge, huge strength today, partly due to ISRG's earnings. They were up 13% on that. But XLV up 0.6%, still just riding over that 5-day moving average. Starting to look like a stage two breakout, especially if we can kind of get that 200-day to start to trend higher here. Gold miners, big gap down, covered a majority of my position in DUST, which was the inverse leverage GDX. Really good cover there. Bounced just above the 50-day moving average. I wouldn't be surprised if this rallies back up into like the 10-day or the 20-day moving average over the next couple days. But in my mind, that would be another spot to get short or long DUST and play this as a lower high. Financials ETF, still a lot of chop between resistance gap overhead, bouncing at support gaps below. Whichever direction that we close above probably indicates the direction that the overall trend of the market will go. Software, some relative strength today, putting in a higher low against last Friday, which is good action. Still needs time overall. We've just seen a lot of volatility here. Home builders down 1.7% today, losing the 5, the 10, the 20-day moving average. Was this just another lower high overall in the downtrend, or did we get support at the 200-day? This is a higher low, and this is just kind of a stall day. We'll see later on. Semiconductors down 1.9% today, undercut the 20-day moving average and the support gap, bounced at that area, but this is our first gap down after making new highs, but not actually pressing at those new highs. That is kind of a worrisome combination. And in market uptrends and in very strong markets, you go theme to theme to theme for stocks that are breaking out. First, it was aerospace and defense. Then it was the precious metals off the lows. Then we started to get semis. Then we got the quantum names, et cetera, et cetera. Now, on the reverse side, we're starting to see themes break down one at a time over and over and over. And the indexes have held up really great because the mega caps are still trading well. But at some point, if we lose the semiconductors as well, I don't think there's going to be enough in the market to keep the indexes up. So definitely keep an eye on semis. The sooner that we can close this gap down, the better. Hopefully, this is just another higher low off the 20-day EMA and we can continue to trend up, but I'm not too confident in that. Nuclear and uranium theme, another gap down, third gap down in the past four trading sessions, losing the 20-day EMA, not ideal there. Biotech's still holding up okay, pull back to the 10-day moving average. I do have alerts set at this gap zone just above the 20-day EMA at 105. This is another theme that I think can lead after a market correction. Anything else? XME, metal and mining ETF, secondary gap down. We did bounce at the support gap, but this seems like a changing character overall. First, like obvious close under the 20-day EMA since August 1st. Before we get into the long and the short setups, it is still earnings season, so make sure that you know when the stocks that you own or the stocks that you want to own report. Today after the close, we had Tesla, which is down a little bit. IBM, QS, last time I checked, was up slightly. LRCX down a little bit. Tomorrow before the open, I'll be watching AAL. I know of Honeywell. It's not really a big interest of mine. But then after the close, Intel, that'll be important. Newmont for gold and metal mining. NXT, a solar stock. Solar stocks have been very interesting lately, so we'll see how the market responds to that. And then Deckers and Ford, too, that I'll be watching. Getting into the long setups, there's a ton of volatility in this market. We're definitely not in an easy dollar environment. We've gone through an acceleration phase on the indexes, followed by a character change on October 10th. And then even though we've chopped higher on the indexes, we've seen all the growth stocks, all the speculative stocks break down. I think it's going to remain a pretty tough environment. I don't think shorting the speculative names that have dropped 40, 50% the last 7 days, I don't think shorting those are going to be really the play. But if you just say, like, I want to be a position trader, or I want to be a longer term swing trader, I don't think trading while the indexes are this volatile is really the spot to get aggressive at. That being said, I do have a couple stocks on my radar. Tesla, uh, right now we're trading under that 424 level, so under today's low. We'll be watching that support gap at 414, little undercut and reclaim of that could be viable. Secondary support gap at 410 is the other spot I would watch for a panic. And who knows what happens overnight. If for some reason we can like reclaim that entire gap down, then tomorrow through the highs, that would be a great kind of shakeout overnight and then breakout to the upside. Again, we'll see. AMD, don't want to buy it on strength, pull back into the gap zone at that 220, 219.50-ish area. That would be a buy spot versus the 20-day EMA. That's a little wide. So if I were to take that trade, I would size it way down. Also, like I said before, these themes in the market are falling one by one like a domino effect. If if semis are next, I don't really want to like step in front of this. But if we can get positive reaction off that gap zone, then it'd be worth trying. Alibaba, I did get stopped out of this today on the undercut of the two previous days' lows, but it didn't really accelerate lower. We haven't taken out Friday's low. All we're doing is building higher lows while the rest of the market is extremely volatile. And this bigger picture broke out of a 3.5 year base and is just pulling back into that breakout retest. Same with the KWEB, Chinese Internet ETF. So big picture, it's just a breakout retest, and this is the most liquid leader in that group. So I do want to keep my pulse on this because I think longer term, this has probably one of the highest upsides. So through today's high would be viable with a stop at today's low. Keep position sizing a little bit light because there is that political tension. NVIS, I thought this was viable at the 50-day moving average and the HVC from earnings. or not earnings, the partnership day. Just another undercut and reclaim of today's low would be another buy spot just for a snapback trade, kind of to the gap zone at 108, maybe to the 10 and the 20-day EMAs, right around like 114. Short term kind of swing trade or bounce trade. I don't think it's just ready to go right back to highs. You kind of talked about this on the leaders list. Um, Tons of buying. Like this is massive accumulation on a really rough day in the market. Still would rather buy this on weakness. So pull back into the support gap zone right around 2030. Manage risk against the lower gap zone at 1960, 1955 would be the trade for me. PSTG, this undercut and reclaim the support gap low. That was really the buy spot. That's the spot that I'll be watching for again. As IGV, the software ETF, chops sideways, seems like if the market is to have another leg up before a correction, which I kind of doubt, software names are another group that I think could have some strong action there. CRISPR tried this today on the undercut and reclaim of this gap, got stopped out pretty quickly, but still think it is a stock and a theme, genomics, something to watch for. Maybe not ready right now. Maybe it'll have to wait until like a market correction is over. But little gap up and then a retest of that lower support gap at 66.15-ish area. That would be buyable versus today's low. Dave, another software name. Today, lots of volatility, but some good relative strength, only down 3.6%. Still closing over the 5, the 10, the 20-day EMAs, and the 50-day moving average. Looking for just a little pullback into that 20-day, then manage the risk under the support gap low. PEGA, another software name, gapped up today, up 15%, strong closing range on a really tough day in the market. It is trading a little bit lower after hours, so a reclaim of that HVC, the high volume close from earnings, that would be buyable versus whatever the low of the day is. Then we talked about energy and oil and gas names with XLE starting to shape up. The leader in my mind, either this or DINO, two stocks to watch, but really starting to build out this handle nicely. We got a gap from the 50-day, pulled in another gap and another gap here. So just looking for another pullback into that 35.60 area. Manage the risk against the 50-day moving average if you can. With oil and gas names, they're better bought against key moving averages instead of on clean breakouts. And in doing so, make sure you have your stop under a key moving average. And then on the short side, a lot of the kind of main shorts that I've taken over the last couple days or week, they've already played out. Like, can quantum go lower? Sure. Does it go lower without a bounce? I kind of don't think so. Like, Rigetti, this was down 40% into a gap zone. IONQ, massive move already. And then you have like Iron, big move down lower. A lot of these names, they can go a lot lower. But I think shorting on day 5, day 6 into a move to the downside is probably not the smartest um, spot to get aggressive. And even with MSTR, which like this is gapping down, I only have two setups to really cover. I don't want to buy this on weakness, or I don't want to short this on weakness. I want to short this on a strength, like pop back to the 10-day moving average, the gap zone, uppercut and fail at $300. That would be the spot that I would play. I don't really want to get aggressive with that right now. And then SNDK, in a market that's starting to roll over, things that show relative strength are the next groups to get hit, the next individual stocks to get hit. SNDK has been showing incredible relative strength. So if the market continues to chop lower, the gap down on Tesla, a break through today's low would be shortable versus just over 150 as your stop. You should try to get traction right away on this name, because if you don't get traction, it's a stock that's shown great relative strength during a choppy market in the market. If the market does have another week or so left to the upside, this could still make a pretty sizable move up. So again, make sure that you're getting traction right away on that trade. Otherwise, just toss it back. So that's going to be the daily market recap. I hope you guys have survived over the 7 or 8 days of chop here that we've had. If you've lost like 20%, 30%, 40% of your account, it's really frustrating for sure, but go back and see what you could have done differently. How can you have sold into extensions to kind of reduce that volatility? How could you have maybe played on the short side like we did, shorting IONQ, RGTI, shorting gold, shorting UAMY, all these parabolic moves that gave awesome opportunities. Try to see like the flip side. And if you need to take a little bit of a break from the market after those types of declines, to like just emotionally refresh. I think that's perfectly fine. Come back when you are ready to come back. This like the indexes themselves are covering up what happened with growth stocks. So if it's been a really frustrating last couple of weeks for you, that's fine. Take a step back, relax, come back refreshed. Hope you guys enjoyed the video. If you did, leave a like and subscribe to the channel. And if you want my market takes throughout the trading day, along with the live stream at the open and any trades that I personally took, you can sign up for the Market Pulse Discord using the link in the comment section. Have a great night, and I'll see you guys tomorrow.